Nvidia reported quarterly financial results when markets closed on Wednesday, August 28, that blew past expectations. Management forecasted revenue of $28 billion for the recently completed quarter, and they delivered $30 billion instead. That led to a better-than-expected forecast for the next quarter of $32 billion in revenue. So what gives? Why is the stock price down by more than 8% in the after-hours market following these better-than-expected results? The price reaction, I think, has more to do with the upcoming Blackwell product Nvidia is launching in steps. Investors were disappointed with the timeline, which is ramping up slower than expected. That will lead to lower than expected revenue and profit for Nvidia's fourth quarter. I'm going to discuss all of those factors I just mentioned in more detail in the video and update my buy recommendation of Nvidia stock. If you're new to the channel, I've had Nvidia stock rated as one of my top stocks to buy all year long in 2024. So tune in to see if I'm changing that recommendation for Nvidia stock following these latest financial results. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. Like I mentioned, Nvidia's second quarter revenue came in at $30 billion and $40. That was up 122% year over year. Nvidia's gross profit margins came in at 75.1%, up by 5 percentage points from the same quarter last year. And as I highlighted at the top of the video, Nvidia was forecasting second quarter fiscal year 2025 revenue of $28 billion and gross profit margins in the range of 74.8% and 75.5%. So Nvidia's revenue of $30 billion was $2 billion more than what they were forecasting. The gross profit margin of 75.1% was in the range that they were forecasting. So that was as expected, but the revenue number was $2 billion more than they were forecasting. Nvidia's operating income jumped to $18.6 billion, and that was up by 174% year over year. If you divide Nvidia's operating income by its revenue, you'll notice Nvidia is generating nearly 66% operating profit margins. $20 billion in operating income would be 66%. So their operating profit margin is astronomical. It's among the best of the best. So not only is Nvidia's revenue soaring by over 100%, its operating income is soaring by over 100% as well. Nvidia is firing on all cylinders with revenue growing, profits growing, and cash flow increasing as well. So it's not surprising that Nvidia's stock price has performed so well year to date in 2024. Now, Nvidia's growth is being fueled by the rising effectiveness of artificial intelligence, which is creating a surge in demand from the hyperscalers of cloud computing like Microsoft and Amazon and Alphabet and Meta platforms to spend money building these AI data centers. Nvidia's data center revenue is where all the growth is coming from, or I should say the bulk of the growth is coming from. $26.27 billion in data center revenue was up by 154% year over year. And if you look at its other segments like gaming, visualization, automotive, and other, those are up, but not nearly as much, 16%, 20%, 37%, and 33% respectively. So the entire company is growing, but nowhere near the amount of growth that the data center segment is driving. Nvidia's CFO saying that the strong sequential and year-on-year growth was driven by demand for their Hopper GPU computing platform for training and inferencing large language models, recommendation engines, and generative AI. Cloud service providers represented roughly 45% of their data center revenue, and more than 50% stemmed from consumer internet and enterprise companies. That 45% concentration among its top 4 or 5 customers is a very high concentration, and that's up from the previous quarter where it was roughly 40%. So Nvidia's revenue became more concentrated in the more recent quarter compared to the quarter before that. Although Nvidia's management has said that demand for its products are broad-based, it's focusing its efforts towards serving these hyperscale customers because they're such large buyers. But Nvidia keeps saying that demand for its products exceeds supply. So in the case that these hyperscalers reduce their spending, Nvidia is hinting that they have other customers that will step up and take the demand. although that remains to be seen. So far, everything we've seen from Nvidia looked like great news. But if you look at the after-hours price action for Nvidia stock, it's down 8.86% in the after-hours trading following the release of these earnings results. So why is the stock price down if those results were so good? And it has to do with this next thing I'm going to highlight now. So Nvidia's CFO saying that they shipped customer samples of their Blackwell architecture in the second quarter, and they executed a change to the Blackwell GPU mask to improve production yield. Blackwell production ramp is scheduled to begin in the fourth quarter and continue into fiscal 2026. In the fourth quarter, they expect to ship several $billion in Blackwell revenue. And so this confirmed rumors that came out a couple of weeks ago. If you watched that video I did about these rumors, where an analyst came out and suggested that Nvidia's Blackwell rollout will be delayed because they're making a change to the technology, they're making a change to the product. And that turned out to be true. Nvidia saying they made a change to the Blackwell GPU mask to improve production yield. And because of that change, the ramp is going to be slower than expected, and they're going to get a couple of billions of dollars in Blackwell revenue in the fourth quarter. And then the ramp will really begin in the first quarter of their fiscal year 2026, where it'll probably jump closer to tens of billions of dollars. And so that delay is likely to cause fourth quarter revenue to be lower than expected and fourth quarter profit to be lower than expected, even though the company's management did say they are going to ship more of the Hopper technology, the older generation technology product that was so popular in the current quarter. They're going to ship more of those instead of the Blackwell in Q4. Still, the Blackwell has been rumored to be higher priced and with higher profit margins. And so the replacement of Blackwell with Hopper technology is likely to weigh on overall average revenue per customer, average revenue per unit, and average profit per unit. And so that's what investors are responding to, most notably following Nvidia's earnings release, because other than this other than this delay, almost everything else looks really, really strong. And so investors are really focused on this. And it's because Nvidia's stock price is incorporating so much excellent future prospects that any sign that their future prospects is not as excellent as expected is bringing down Nvidia's stock price. And that's understandable. I mentioned heading into these earnings results that if Nvidia did confirm those rumors for Blackwell and a delay in Blackwell, that it would bring down Nvidia's stock price. And that is indeed what we saw. Even though they delivered revenue much better than I was expecting in this quarter, the delay to the Blackwell architecture, the change in the mask to improve yield, did bring down investor enthusiasm for Nvidia stock. Cash flow from operations were excellent. $14.5 billion was up from $6.3 billion a year ago. So they more than doubled their cash flow from operations, up to $14.5 billion. They're generating so much cash, it's too much to reinvest in the business. The company's returning capital to shareholders. They bought back $7.5 billion of their own stock in the quarter, and on August 26, 2024, the board of directors approved an additional $50 billion of share buybacks for Nvidia. That's a massive buyback program, and I guess it's now putting Nvidia with their company in these large cap tech businesses, right? Alphabet announces buybacks of this magnitude. Apple announced a buyback upwards of $100 billion. So Nvidia is starting to behave like a several multi-trillion-dollar company. Now that it's generating these levels of cash flow, it can facilitate these levels of buybacks. Looking ahead, third quarter revenue forecasted at $32.5 billion was much better than I was expecting. Remember in the preview video, I highlighted that they're likely going to forecast something in the range of $30 to $32 billion. $32.5 billion is above the higher end of the range that I was expecting. And the gross profit margin of 74.4% to 75% would be an increase from the prior year, but not by all that much. And that makes sense. NVIDIA's profit margins are already world-class. I don't suspect their profit margins to go up from here. If they can just sustain their profit margins at anywhere near these levels for the next 4 to 8 quarters, I think investors would be satisfied. That being said, Nvidia's revenue growth rate is starting to slow down, finally, right? If Nvidia does indeed deliver $32.5 billion in revenue for its third quarter of fiscal year 2025, that would be less than 100% growth from the $18 billion they reported in the same quarter the prior year. It would still be a massive increase, right? $14 billion more than the same quarter last year, and gross profit margin improving from the 74%. They are now forecasting in the range of 74.7% at the midpoint. That would be higher than the amount they reported in the same quarter last year. So continued phenomenal revenue growth expected, although it is slowing down, decelerating. As I've been talking about, Nvidia's revenue growth is not going to sustain at above 100%. It's going to slow down. It's going to decelerate following these surging revenue numbers the company delivered in these last 6 to 9 quarters, ever since the boom in demand for artificial intelligence. So following the stock price decrease, Nvidia is now trading at a forward price to earnings of 32.8, lower than it was trading at the peak levels earlier this year, but higher than when it was earlier in the year. Now, as I mentioned at the top of the video, I've had Nvidia's stock rated as one of my top stocks to buy all year long in 2024. I last updated that recommendation on July 1st. And following these earnings results, following these numbers, I'm reiterating my recommendation of Nvidia as a top stock to buy. I liked almost everything I saw from the company this quarter. The only downside was the rollout of the Blackwell technology later this year, probably spilling over into its next fiscal year. That was the only downside. But then now the price is about 9% lower. So you're getting an offsetting factor of a lower price to compensate for the delayed rollout. All in all, I still like Nvidia stock. I still think it's an excellent long-term investment. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.